Welcome to Money Discourse. Coming up, is inflation back to stay? Earnings season is over. What were the standouts? And Tesla earnings day reactions. Rajan, why don't you take it away?
Yeah, so it's been a bit of a while since we did our last one, but the biggest story and what's been really pushing, I've been saying it since this year that we're going to be in a choppy market environment, and it clearly shows that over the last couple of weeks we have had a bit more sticky inflation numbers, especially out of Europe. Now we saw the last CPI print out of the US, which did decline, but not as much as expected. The PPI number was actually much stronger than expected, and now we've had inflation numbers out of Europe. Plus, we've seen a lot of the components out of this ISM manufacturing. A lot of the other services where the prices paid component is still pretty high, sort of suggesting to us that the prices paid, the inflation rate is not the rate of change of prices now sort of leveling off, and it's not going down at the same trajectory as it was towards the back end of last year and the beginning of this year when we got that rally. And in fact, last week we actually had French inflation, which came out as 0.9% actual on a month-on-month basis for their month-on-month inflation, and 6.2 for their year-on-year, which was above the prior month 6%. So we actually had a 0.2% increase in French inflation rate. The same with Spanish. It was expected at 5.9. The prior was 5.9. We were expected to go down to 5.7% year-on-year rate. It actually went up to 6.1%. So that's 0.4 above expectations and 0.2 above the prior month. And then we also had Italian inflation, which was quite worrying as well. The Italian inflation actually came in well above consensus. Same with the German inflation, which actually stayed steady at 9.2% in certain parts of the country. So the actual German inflation rate was 8.7%, which was up from 8.7% in the prior month, but it was also above the 8.5% consensus. So we were 0.2 above that too. So just in general, we've just seen a lot of these inflation numbers out of Europe, which have really just very, very sticky, and actually put a bit of a damper on the actual overall rally. And again, that sort of goes into my thesis that I was saying that we're just going to keep on chopping. Because one thing we were saying before, right now, this is a market known. Market knows inflation is a bit high. Market knows it's sticky, and hence that the market is reacting, but it's not a black swan yet. Now, what will really be the real picture is that all of a sudden, if the central banks all of a sudden continue to do 50 basis points, 60 basis, and go up to 6%, for example, the market is sort of seeing the US Federal Reserve going to around 5.25%. But if inflation keeps on rearing its ugly head and the central bankers are like, well, hey, employment is still robust, the economy is pretty strong, all the economic numbers are showing that in general, the market is handling it pretty well, the economic market. So let's go up to 5.5%, let's go up to 6%. And if that happens, then we could really get a damper. And then if you look at a lot of these earnings, I mean, a lot of them held up pretty well, but you could see a lot of cautious guidance among a lot of these big names, and that has weighed on a lot of these stocks. So for example, we had Walmart last week, which actually had a pretty decent earnings, but we had Target that reported this week, the one that just went, and we actually had 189, which was a big beat of the 140 expectation. Revenue was also a beat, but if you look at their Q1 guidance, it was between 150, 190 EPS, which was below the 210 estimate, and their full year guidance is well below expectations too. Now, I think that a lot of these companies are sandbagging their guidance, extra caution due to the current environment and recession fear. So a lot of the modeling that is going on with a lot of these companies is pricing in slight recession and inflation to stay. And so we're seeing that reflected in the guidance, and we're getting some of these companies really just sell off on the back of that. But again, we get this initial sell off and then we sort of come back again. So I mean, this has just been the general way that you've seen cost cutting. I'm seeing job cuts still everywhere in the tech space. And now we've also seen it in the auto space, seeing Ford letting go of about over 10% of their European staff. GM, although it's a very small job cut, but they just announced 500 positions going in the last week, which amounts to about 1% of their workforce. But this 500 job cut for salary position comes after Mary Barra did say we plan no job cuts literally a few weeks earlier. And now she's cutting 500, the company's cutting 500 jobs. So the thing is that all of these companies are trying to become a bit leaner. They're all, it does seem like, especially in the tech space, which has got it the hardest, you're seeing a lot of these cuts, but now it's sort of filtering through into the automotive space. And now the question is whether it's going to continue into the retail. And that's where it's been strongest right now, where you see most of the hiring going on, and whether that happens as well. So it's, you can start seeing that it's all coming together now. The Fed's stance, it's starting to force these companies to contract a bit. Whether it continues, I don't know. So let's just see. But it's been a bit of a interesting week, especially on the economic data. What did you see on your end?
Yeah, well, we've seen that the fears of this huge earnings recession weren't as bad as initially expected. I guess we've had some decent earnings this week, and we also had the notable Tesla Investor Day. And I guess it wasn't the Investor Day I was expecting. I was expecting a lot more stats numbers for the investors, but I think it was more like a Tesla education day. And like I predicted, the stock, kind of tanked 10% from the highs of the week to under 190. But I think, as you see, the investors are kind of slowly digesting how well Tesla are doing, especially in regards to lowering cost at a hugely accelerated rate compared to the industry. One of the things that really interested me the most is actually how their drivetrain unit is going to be under $1,000 to produce, right? And that's huge. And especially that these motors are not going to have any rare earth magnets. And you saw MP Materials take an absolute dump after this, because if this is the future, a lot of these rare earth materials aren't required as much. And this is something that the industry will probably end up following, but it's going to be probably a long time until that technology kind of gets to everyone else, because they're just so far behind.
That was one thing about this investor day, because I did know. So Tesla did initially go down, but it brought down a whole bunch of other companies, and due to their new powertrain, we actually had MP Materials on that day down 10%, on semiconductor down 6.5%, ST Micro was down 6.5%, Wolf. I don't know, they probably do something to do with the drivetrain as well. They were down 11%, and they came out saying that they ain't going to be that impacted, and there's still going to be a lot of their business still is going to be involved with Tesla trying to soothe the market. So we just saw a lot of reaction. That was the more interesting part of this investor day, to see the reactions of all the companies that associate with Tesla that actually were down quite a bit. So that was really interesting on that front.
And then they had this whole long 3-hour presentation, and then with no real kind of new announcements. And to be honest, some parts of it were a little bit snooze fest, in terms of, oh, this is all the things that we had to do during the COVID restrictions that were imposed upon us throughout the whole supply chain. Yeah, that's really good to know, but people were expecting things maybe to be a bit more looking forward. And one of the cool things, we saw the Tesla bot pulling out some hoses and doing some stuff. So that's all happening in the background. And hopefully, I mean, I'm not expecting anything this year, but next year, hopefully to see some kind of material production of the Tesla bot going in and actually helping in their factories. If you look at the Tesla bot, and you look at what they announced in terms of the way they've actually configured the next generation car that they're actually going to produce, it's all kind of produced in these sections and kind of like put together at the end, rather than the previous way of doing it, which is, you kind of spray the whole body, then you take off the doors, then you kind of insert the interior, and you kind of do that all within. And if you look at robots, they're not going to be as dexterous to be able to do all of that type of stuff with precision. But if you've got a rear cast, and then you put everything onto there, including the seats, and then the front, and then you kind of just like add the sides onto it and the roof glass, it's going to be a game changer in terms of lowering the cost. And that's what I think the main thing that you can take away from what Tesla was saying is just relentless focus on lowering costs. And it's going to be hard for the existing industry, especially like if you look at VW, they were going to create some new factories in EU. They kind of all abandoned that, and they're going to repurpose existing factories. If you look at how many issues that Tesla had with Fremont, with that factory, it's a nightmare because it wasn't designed from scratch, and it's just going to never be as efficient as it could be if you design it for purpose. So that was one of the things. And afterwards, you kind of saw a pre-market Tesla taking a dump, and then Elon comes out for the question and answer section of the Investor Day, and he says, oh yeah, we open up in Giga Mexico. But it's really interested with that. Tom Zhu, who probably is going to potentially be the head of running Tesla soon enough, and he was saying that Giga Mexico is going to be for this next gen vehicle. And I think they didn't show the next gen car is because they don't want the Osborne effect to happen, which is basically killing sales of your existing models before a new one is even available. And I don't think it's going to be available at least until maybe the end of 2024, even early 2025. Anyway, so what's the point of showing this off? And then people
they need to get the Cybertruck available. Like people are still waiting for the Cybertruck, let alone this.
Yeah, exactly. They've got so much to still deliver on that Roadster. Where's it?
Exactly. I mean, they've still got the two cars. Yeah, I mean, they need to just go one step at a time.
If you look at Giga Mexico, Tom Zhu saying that this isn't going to be creating cars for the US. So if that's the case, that next gen vehicle is going to be able to service probably all of Latin America. And if they're going to create some other factories, potentially other places in Asia, there's a lot that can be gained from a smaller subcompact car. However, the thing is, in terms of the cost, they're reducing it like crazy. But, to create, like, say, a VW Golf, like a small compact car, compared to a 3 Series, like how much? Passat, or whatever it is, like just something like a saloon car. It's the same as the Model 3 size or the Model Y size. It's like, how much difference is it in terms of cost?
No,
Yes,
no,
there's
it's
a
like
bit
it's
less.
like trainers. It's like
Yeah.
a child's trainer and an
Yeah.
adult's trainer. They're almost the same price.
Yeah,
But
exactly.
you know,
So all these
it's
guys
just,
wanting this $25,000 vehicle, I mean, like realistically, it's just not feasible to create a car at that kind of price unless you just are focusing on cutting the cost along the whole supply chain, and that means that like a Model 3 and a Model Y would just be so much more profitable, or they could bring down those costs as well. So I'm expecting this this car to be the robo taxi type vehicle, and I don't think it's going to be for sale, to be honest. But let's see what happens. It really depends on how, FSD. You just look at Elon's promises. Look, I have FSD on my Tesla because I believe that Elon, and in terms of it's going to come in March. Okay, it's going to come. He said he'll be really, really surprised if it wasn't launched the end of last year, and then now it's already March. It's much harder problem.
That's
and
the
you
thing.
see,
It's all good to say it, and I think that's what it is. Everything's about see it when you believe it when you see it. But the main thing about that, it caused some volatility. We had some movement in some of these stocks, but we had the tail end of earnings season, and I think if you look at some of the standouts, I was looking through a lot of them. We've seen some big movers, a bit like Meta, which moved huge, went to like 190 or something on the back of those the capex cut, and market really liked that. We saw, just pretty much average earnings at the other major names like Apple, Amazon, Google, all of those ones. But one that really stuck out to me in terms of a genuine, strong number was actually Salesforce. Now, Salesforce.com actually had a 15% increase in its share price. It was pretty wild, right? So the actual number was at $1.68, which handily beat the 136 estimate, and the revenue was 8.4 billion. Which also beat the 8 billion consensus. They raised their share purchase program. They guided their Q1 well above consensus. Their revenue was also above consensus, and their 2024 guidance was 712 to 714, which was massively above the 583 consensus. So if we just look at the move in Salesforce, then we were trading around 167, and we went to a high of 193 on the back of that. So it was a money. But I mean, if you look at where it was, obviously still down massively from the highs, but 300. But based on that guidance and based on just the overall numbers in that, in terms of this was a number which was more focused on just genuine organic growth, as well as a bit of cost. I didn't see how much cost reduction they did in this one, but the organic growth was huge. And I think as a pick, considering where we are, we did get to a low of just over 125. But I was really looking at that, and I thought it was a great number. And the thing is that if the market falls, this is one stock that I'll definitely have on my radar to start picking up, just based on how ambitious they were on their guidance, how much they smashed expectations away, and in general, how good they said their business was. So Salesforce was one that I definitely liked. We had some of the the monthly car numbers as well. In general, all these automakers reported record sales for February. I'm saying it was their best February, but it's just the EV production. That's what I was looking at. I've got a Mach-E. Again, I think it's a fantastic car, but the thing is, they're definitely sandbagging their sales because they've been selling roughly 2,000 a month every month since they've had it out. And I know they can probably sell more, but because they're probably not making any money on it, they just don't want to sell anymore. And then we actually had comments from, I think it was one of the Stellantis executives saying that we don't want to produce vehicles to not make money on it. And so this is the thing. So there's a lot of these companies that are selling a shit ton of ICE vehicles, but it's they're sandbagging their EV sale just purely until they can become more profitable, and that's what seems to be the case. But if you just look at the S&P, let's just look at where we stand for that. Now, we got to the high of 4,200. I think our last pod we were talking about, it was around this level. And then as expected, we touched the top of this range and we went back towards the bottom of the end of this channel that we've been in. And as soon as we hit the bottom of this channel, we had two nice green bars, and now we're back up again. So again, this could continue going up, but I think we've got to see more rhetoric at the Fed. We've got to keep on looking at these numbers. Like I said, in Europe, this inflation number wasn't good. The inflation picture didn't look good, as it is reversing the earlier trajectory. And we've seen some really, really sticky prints, especially out of Italy, which was around 10%, which was quite shocking, really. But we had two nice green candles. And so the thing is that whether it continues or do we just keep on chopping back and forth. I can actually see now this range literally be 3,900 to around 4,200, and we just do that pretty much the whole year. And we might have a little few dips above and below, but this is just what we do the whole year. Because again, like I was saying before, I just don't see any catalyst in terms of really pushing this much higher or much lower, other than a lot of this option activity and just gamma squeezes and this and that. And yeah, so it's going to be interesting. But I mean, looking ahead now, there's not really much earnings. Q1 is going to be coming up in literally about a month, so we'll see where they stand from the first quarter. But yeah, I mean, it's been pretty just steady Eddie really for most of these companies.
In the All In podcast, they're saying, there's still a huge amount of money sitting on the sidelines, and I think maybe potentially that's going to be deployed into some of these AI companies as FOMO kind of sets in.
Yeah.
But otherwise, for the rest of the market, everything is data dependent at the moment, and you're going to see a lot of chop. But I don't know. I don't see, like you said, Reg, I don't see any massive catalysts to move things forward, at least for the next quarter or so.
Yeah. So, but if you liked what you heard, we're keeping it short today. If you like what you heard, please like and subscribe. And yes, leave a comment if you would like. Follow the average trader or the money discourse portfolio. The trades are a bit light on there right now. Just don't really see much opportunity. I'm just trying to sit on my hands and wait for better opportunities. Happy about Nat Gas. We did speak about that, but I just told you, this is it. It's the one that will just, you could have got a 50% gain in Nat Gas. UNG was $7 and now it's almost 10. So that was nice. Got me at the hole, and now I'm pretty much out of it almost. Got a little bit on still. So that's it. So just keep on following, and we'll follow the Twitter page as well. Good content on there, and we'll catch you on the next one.